All right, I've started recording my screen and now I want to share my screen. Can you all see my screen?
Yes.
All right. Okay, so at this point, we're looking at the trading view, and I just want to ask quickly, have you set up your account to the trading view?
For me, I just registered.
Okay.
I've not funded the account anyway.
Okay. All right. That's okay. You can do that. I just wanted to go through with this quickly. Or let me quickly ask Adejoke, have you set up your TradingView account?
Yes, I have, but I haven't funded too.
Okay. The beautiful thing about it is you can actually use all of their features free for 30 days. That's for 1 month. So whilst you're playing around with the TradingView, you can just set it up and use it for one month. Their basic account gives you limited settings, but with the Pro account, you can actually the Pro and Pro Plus, you can actually do the 30-day trial, and from then on you can set it up. I know, for some might want to do the 30 days trial, and then when they've started making profits, then they pay, because I think it's around $12-13 per month for the Pro account, and then the Pro Plus is a bit expensive. But anyways, you can just try that using the 30-day trial. But we'd just like to get right away on this. And what you're seeing here at this, are you guys seeing where I'm pointing my cursor to?
Yes.
Yeah.
All right. So we'll just start right from there. If we are familiar, have you used TradingView before, Victor?
Yes, I have the app on my phone.
All right. So since you've been trading, you know that from trading you can select multiple time frames. But when it comes to leveraging, what we do is we make use of a certain time frame, three kinds of time frame, which we'll be going through. So this session today is about giving us the strategy that will help us to be profitable when we're trading, when we're taking long positions or short positions when we're trading. So I'm going to make it really as simple as possible, so that even if we've not been trading before, this is a new thing for us, we'll still be able to make use of this. We don't have to actually know everything, but the main thing is what I'm going to share. And so let's just start right away. So when you're on TradingView, the chart you want to first of all select to use, you want to look at your drawing tools and to create a shortcut for your drawing tools. Basically, the reason why we're using drawing tools is, we use it to spot different. Just want to use it to see where price action is taking place. So that's the essence of using drawing tools, and the one that we mostly use of. Can you guess, Victor?
Yes, I'm here.
Yes, I know. Can you guess the symbols right here that we mostly make use of?
The symbol.
Yes, or you're seeing different symbols here.
Yes. Trend line.
Very good, trend line. So the reason why we make use of trend lines really is basically because it helps us to see where price action is taking place. Like in the last session, we talked about different strategies that, get in, get out. You should have a strategy of different prices you want to place. But really, when you're trading or taking positions with leveraging, you're actually trading each day. And what I mean by that is you're mainly a day trader. In the traditional market, you could say, I want to get in on this particular coin this week. I heard they are going to have news next week or 2 weeks time. So you take a position and wait till the week that they have their news for it to go up in price, and then you sell and make profits. But with leveraging, you don't take positions on a long time frame. That is, you don't get in and hope to get out in a week or 3 days. No, you don't do that. So you might want to take note of this. When you're taking positions to long or short, you don't take positions and stay on that position for more than 24 hours. Hope everyone got that.
Yes.
Very good. So please keep that in mind. It's really very important. Adejoke, are you with us?
Yes, I am.
Right. So basically what trend lines do is they help us to see where price action is taking place, like I did say. So what you can do is, this is a trend line. So you can just select this if it's what you want to use, but you can see here, add to favorite. Since you'll be making use of trend lines very often, you want to select that. So that being selected, my trend line is here. So if I want to use it, I can just click, and if that's the color I want to make use of. It's already selected. I can just go from here. So that's the essence of having this trend line as your shortcut. And then I can simply pull it to somewhere that's convenient. I can take it here. Yeah, that's pretty good. Yeah, I can put it there or anywhere else I want to. That's convenient. I can actually put it here too. If I try to untick this, it disappears. But just so you know, you'll be making use of trend lines a lot. So you can just basically add your trend line to your favorite. Then another symbol we want to look at, we're already seeing is USD here. Since we're trading on, I should mention this really quickly. Although you're being taught how to leverage using Ethereum, however, the same skill applies when you're taking long or short positions for Bitcoin. And the same skill also applies when you're taking long or short position for Binance Coin. If you've heard, they've already tested their exchange where they want to offer margin leverage trading. So it's going to be out in a couple of weeks, I think about 2 weeks from now. So this skill is actually so unique, this strategy, that I'm teaching everyone right now, because you can use it to take long or short positions in Bitcoin, in Litecoin, in Ripple, in Cardano, in Binance Coin, and of course in Ethereum. Isn't that really nice? Hope everyone can still hear me.
Yes, I can.
Victor, can you hear me?
Yeah, I'm following. I'm following.
Very good. So another part we want to look at real quickly is, let me just start from the beginning. Now you will see many different things here, but what you want to quickly look at is, for now we're talking about Ethereum, we're talking about Bitcoin. So if you want to select Bitcoin, just go to where you have your symbols, and let me just delete that. From here, it's selected by default because I already selected it before. So this is Ethereum. So if you want to select Bitcoin, just select XBT and you search for BTC on perpetual contract. Let me just select that XBT USD. Very good. You can see here. If that's what you've selected, then it's going to bring up the chart of Bitcoin. So notice here that what you're seeing is XBT USD, perpetual inverse swap contract, and you look at the exchange here on BitMEX. Now, the reason why we're using BitMEX, there's a particular reason why we're selecting BitMEX. Can anyone guess? Can you guess, Victor?
I don't know.
Okay, no, it's really fine if you don't. I just want it to be very interactive, so that's why I'm asking questions. So the reason why we're selecting BitMEX is because of volume, trading volume.
Okay.
If you just look at coin market cap, for example, here, let me just type in that coin market cap, and I select BitMEX right here. This is their trading volume in the last 24 hours, 5.4 billion. Just on BTC alone, of course, they have many different crypto you can leverage there. But just look at that, XBT USD is 5.4 billion. And Binance is actually a big exchange, but if you look at that, Binance has just 1.9 billion. So the reason why we're selecting, appears someone, okay. The reason why we're selecting is actually because of volume. they have more volume in the market. So if you want to really get the most accurate results of volume in the market and the direction that the market is going, you have to really look at BitMEX. And the same thing for Ethereum, but this time, like I did say, we're leveraging on ETH. So you just select ETH and just search ETH USD, and it's going to give you this perpetual contract, BitMEX. However, I just want to show you this real quickly again. Did you notice in both Bitcoin and Ethereum that we selected, you notice on perpetual contract? Well, you can also see XBT and USD on really different exchanges, but what we're actually looking for is the perpetual contract. So this just brings all the information about margin leverage, which is what we need on BitMEX for Bitcoin and then for Ethereum. So that's why I was selecting perpetual contract. So I'll just select that. So that's actually really nice that we've actually done that. And here you would notice that you're seeing different symbols here. You can actually quickly add them too. You can do ETA. Okay, someone else has joined us. Okay, it's still Adejoke. Seems like she joined the meeting twice. All right. So ETH USD here. Let me just do that over again. So for ETH, you're adding ETH USD. Okay, I messed that up. ETH USD perpetual contract added. It's right here. And then XBT USD perpetual contract. So you can see right here for Ethereum, it has been added to the quick symbols here. So for navigation purpose, you can just simply come here real quickly. And if you want to select trend lines, that's what you want to use. You use it quickly. And if you want to see the symbols, you just add that real quickly. So that being said, we'd just like to jump right on to trend lines now, using trend lines. You come from the background of Forex, Adejoke. Do you normally use trend lines when you're trying to use it to tell where the price action is when you're looking at candlesticks? Do you normally make use of trend lines?
No.
Okay. Well, you don't really have to know much about trend lines, but the basic thing is when it comes to trend lines, you just need to know the basics. So once you know the basics, it's really very nice. So what happens when you're using trend lines is the reason why we used it, like I did say, is you want to spot where price action is taking place. So that's actually why we make use of trend lines. And so usually when it comes to price action, it's actually 2 points. And so when you're drawing your trend lines, all you simply need to do is to just look at the top of the trend and then the bottom of the trend. So let me just do that real quickly. So I did say when you're trying to figure out where price action is taking place, you draw trend lines at the top and then at the bottom. So let me just give a quick example of that. For this right here, this is actually where price action is taking place, right here. Yeah, just about there. So that's what you really try to do. And the reason why you're looking at this, I did say if you're drawing trend lines, you simply want to look at, okay, looks like Victor is back, or Luis, okay. All right, like we were saying about the trend lines, the reason why you make use of trend lines when you're trading is because you want to spot the significant point where price action is taking place. And so here, this trend line that you've just seen me, price action is taking place here at this point, and then at this point, and then at this point, and then here. But did you take note that actually you notice it started moving from here and it went up? You notice I didn't really check or figure out the point where the coin just, I mean, the trend went up to, but I just drew a trend line at the top and at the bottom. And do you take note that although the trend line was randomly placed at the top and at the bottom, but at the point, two different points here, here. So if the market is going up from here, right here, and I place this trend line here, and I want to actually see or understand the price action here at this region, I just simply put my trend line here and then at this point and then at the bottom. But then did you take note that you could see that the price goes up and then went down and then up, down, but you notice it's actually in a particular range. It's not going above the trend line, neither is it going below the trend line. Did you notice that this point here, from this point of the trend line and then to here and then to here, the price never really dropped below here and below here? So that's really cool because it gives us an idea that if I'm getting in, let's say for example, I wanted to take a long position right here, and I decided to draw this trend line from the top and the bottom. I'm actually seeing that if I'm taking a long position here and the price goes up, and I've already drew this trend line from here at the bottom and then from there at the top. What that helps me to know is when this price goes up right here, when it went up, it went down. And so if I took a long position right here, because I've already drew a trend line here to this point, I already know the price is going to react here. So that just gives me an idea of the support levels and the resistance level. And when we say support, the bottom of the trend is actually the support. And why it's called support is it went up and then it went down, but it's not actually falling below this. And then it went up and then it's actually here. So this is the support and then this is the resistance. If you notice from here, it tried to break out from here and went up, but it could not. So it went down and it tried to break out again from this line. You notice from this point, it didn't break out from here and from here and then went down. So what trend lines, what they do is they help us to see the price action and they help us to see where the price is likely going to move up to. This is the resistance level. And if it doesn't break that, then it's going to fall below the support levels. If it doesn't break that support level to the downside, then it's going to retest that resistance level. And that's what happened. We tested it, it didn't break out, then it went down, it's testing the support again. That's just an example. If I delete that and use another, okay, let me just do it from here. From this level right here. Okay, let me take it from here and then to this point. So this is another example of the same trend lines. So if I were taking a long position somewhere, I mean taking a short position somewhere here, let's say you just enter the trade and you see this red candlestick, it's right here right now. And then you're like, should I get in? Should I get out? I'm not so sure. Okay, you just simply use your trend line to spot where price action is taking place. And you put one at the top and the other one at the bottom. And the price comes down. The price went down. This is the support level right here. and then it break it to the downside. And so if you were thinking, should I go on a trade, and you wanted to take a long position from this point, then you know the level you should be looking at is right here. If you were taking a long position from here, you should be looking at getting out from this point, because it went up to this point, to the resistance, but it didn't break out. It's going down. It touched the support level and it went up. It didn't break out to the upside. And so if you were entering or taking a long position anywhere here, you should know at this point you should be getting out, knowing that the previous resistance didn't break out. So you should have been very cautious there. But let's say, for example, let me move this now to somewhere. Let's say you drew your trend line. Let me just delete this. Let's say you drew your trend line from this point right here. This is actually a daily chart. So let's say you drew your trend line from right here, or you started from here. Just delete that. From this point, and then you drew it up to this point. There's a reason why I decided to draw it above, because you're looking at support and resistance. So if you were here and it went down, and this is the support, and price is going up, and then you decided to take a long position somewhere at this point, but then you notice right here that when it touched this region here, a red candlestick came out and another green one. Guess what happened? The next candlestick that came out broke out from this resistance. It has been trying to break out from here, right, from this point, but it could not. So it went down, went up, could not, went down, same thing, went up, it could not, went down. But at this point, it broke out from the resistance, from this level. And see what happened. When it broke out from here, it went parabolic. So the reason why you're using trend lines is going to tell you where price action are taking place. So if you were taking short positions or long positions here, what you'll be looking at, or what trend lines can help you to see is it going to break out from somewhere here? And it did. And normally once it breaks out from the resistance levels, it has not passed this level before, from this point and from this point. But when it did, it went up. So if you're trading and you notice the candlestick breaks out from the resistance level, then that tells you that the position you've taken is likely going to continue to go up, because it has broken your resistance levels. So you may want to write this down whenever you're trading, and from your trend line that you're using, and maybe you were trading at this level or at any level, and a green candlestick, if you're trading if you take a long position to the upside, if a green candlestick breaks above the trend line, the resistance level to the top, then that tells you that the price of Ethereum or Bitcoin, whatever you're taking a position with, is going up. If it breaks above the resistance level, which is the trend line that you've placed. And then if you're taking short position to the downside, and then the price breaks below the trend line, this is the trend line below, this is above. But if you were going down and you see a candlestick, a red candlestick opens and goes below the trend line, then that tells you that the price is going to fall, to really fall. Because here it tested the trend to the top, it didn't break out, and it went down, it didn't break out, and then it's testing it to the top, and then it broke above the resistance level. So if it were the other way, you were trading to the downside, you were taking short positions, and the candlestick breaks below the trend line, then If you were taking a short position, then you know the price is going down. It's really going down. But if it doesn't break below, but it bounces, like this one here, the red candlestick came. This one right here looks like it was going to break below the trend line, but it did not. And then another one came and bounced up, and it went up. So just take note of that. Those two levels are very important. If it breaks the above trend line, the resistance right here, then the price is going up. But if it breaks, if a red candlestick comes out and breaks the trend line below and crosses it and goes down, then that tells you that the price is not going to hold, it's going to go down more. So that's the beauty of trend lines. That's what trend lines can help you to do real quickly. So I just wanted to help you see the importance of using trend lines. It helps you to see where the support level is and where the resistance level is. This is the support right here at the bottom, and this is the resistance. So just to explain what support and resistance is, support is when price has been bouncing and holding in that particular area here. It has been bouncing here, it went up, it bounced, and then it went up. So that's your support. And then for the resistance, it's actually when price is trying to break above the area right there. Tried to break above, went up, was a bit stable, went up, and then came down, and then went up, It tried to break. You notice here, could not break out, and then it went down before it finally broke out. So keep that in mind. Support is when price has been bouncing and holding in a particular area, and then resistance is when price is trying to break above the trend line at the top. Okay, so we just like to proceed. Right now, I'm not going to teach you everything about trend lines because the strategy we're using right now is you're basically making use of support and resistance to know where you should be taking positions, long positions, or where you should be taking short positions. And another form of trend lines that you want to know is actually horizontal trend lines. And the way you simply want to do that, I'm going to show you that real quickly. What horizontal trend lines are. Okay, this is a perfect example right here. Let me just draw a trend line. Another way you can simply do that is to draw it somewhere here. Okay, let me delete that. Take it somewhere above. Okay, that's pretty nice. Now, from this is actually horizontal, or horizontal trend line. So what is actually helping you to do is, remember we talked about support and resistance. And for the horizontal trend line, they actually still help you to know where the price is reacting. For example, if you look at this point right here, it came down in price and it went up. Now at this point, look at where it's coming from. So when you're trading, your mind tells you, okay, is it going to go to that level again? You're actually not going to guess, because if you're guessing, it's going to really be difficult for you to get it right. You don't actually guess when you're trading. You just make use of the information that you have. It tells you what direction the market is going. So look at the levels it was coming from, and then it went down. And if you were taking a long position here and you got to this point and you're wondering, is it going to go above this point and to this place? So all you need to do is just look at the previous price, the previous places where price were reacting. For example, it went up from here. Normally, if you were trading, taking a long position from this point, you should have sold somewhere here before it fell down. So it went up here, but look at what happened. It fell down in price. And then it was going down and started going up. There is a green candlestick here. And then you're wondering, is it going to break above this? Now, if you were trading at this point, when you're thinking, is it going to break above this and go to the upside? If you were right here and you see 1, 2 candlesticks opening and another one, and then another one here, that tells you you should be exiting this trade by then. So if you had exited here and you wanted to know, okay, this trend, this next trend, is it going to go above this and go up? You simply look at the previous trend line, candlesticks. Did it break above this point? And that's what you saw here, did not. So if you were on this position right here, what your mind should be telling you is you should have been taking note of the previous trend line. And if you took a long position from this point, you should have really gotten ready to sell here, because these are where sellers, this is actually the point where sellers are selling. Yeah, it's actually the point where sellers are selling. And then if you had sold here and it went down again and it went up, and you took into consideration the previous candlestick, this one actually broke above. So if you were taking a long position to this point and then you look at the previous one, you should actually get ready to also sell at this point, because price reaction are really strong there. And that's why you see the trend going up and then it didn't really break out, came down. However, you will notice something different from here, these levels. From this point, price action did not go above. It stayed almost at the same levels. But it crossed the levels at this trend right now. So that tells you the price is about to cross above these levels, and that's what happened. And remember, your horizontal trend line is actually there. And the reason why you had that in place, I was actually coming to this, but I just really wanted to explain this for everyone. The reason why you placed this horizontal trend line here is you wanted to see if there was going to be a breakout. And what happened? A green candlestick opened up. The moment it crossed, the green candlestick crossed this horizontal trend line, then that tells you that the price is likely going to go above and it's going to break this previous point. And that's exactly what happened. So that's actually what horizontal trend lines can help you to do. They can help you to, if you're trading on a long time frame, this is actually a daily chart, 1 day. So if you were looking at a longer time frame and you were wondering where is the price going to react, trend line will help you to figure all that out. So in this case, you didn't have to really guess to know if the price was going to go up above here, because the candlestick is very close to that point. But remember, we started the analysis from here. And then it went up, same levels here, reacted here, same sell-off here, it went down. Same thing for here, but a green candlestick opened up, and then eventually it was getting close to the horizontal trend line. And when it touched that level, then it tells you that the price is going to go up. If you were practicing on your own and you use this horizontal trend line to look at different time frames at different times, you would notice that it always points to the same thing. So that's just the power of making use of trend lines. It tells you where prices are reacting. So that's actually about that. Another thing I would like to mention, another strategy that you make use of is you make use of multiple time horizons. um, the essence of making use of those multiple time horizons is sometimes you may have entered a trade and it goes up, and then what happens is that the price now drops down. And usually when that happens, it happens because uh, you've executed on a specific time frame without looking at the bigger picture. Simply what that means is you might be trading on a particular time frame. Say for example, you were trading on maybe 30 minutes or 45 minutes, but you actually did not make use of a big time frame like one day to know exactly where the direction of the trend is. So, for those of us who are using, maybe we've been using the daily chart, for the daily chart right here that we are looking at, for each candlesticks that we're looking at on this daily chart, I just wanted to mention this real quickly. For each candlestick, every single candlestick that you're looking at on the daily chart is actually one day. So this is actually one day. This candlestick right here is one day. This is one day. This red here is one day. The next is one day. So if you selected the daily, all the candlesticks represent one day. And the way we make use of the daily chart is we make use of it to see the overall trend of the market. Where is the trend or the price pointing to? Is it coming down or is it going up? For example, if on the daily candlestick that you were looking on the daily, you use the daily chart one day that you selected it. What I'm just trying to explain why sometimes someone might enter a trade and what happens is price goes up and he feels, oh, this is a good time to take a long position, and then he takes a long position to the top, and then surprisingly price starts falling. It's actually because the person has not taken the higher time frame into consideration. So the person was probably trading on the 30 minutes or 15 minutes. So it's really important to take the daily time candlestick into consideration. So for example, if the daily has opened up with a red, say for example here, this is actually, I did say each candlestick represents a day. So this is a day, this is a day. So say for example, the daily candlestick opened with a red, just like this one. Just like this one right here. Now, do you notice right here it's red? But if I were to switch, how many candlesticks can we see here? One, two, this is actually on the 27th of June. On the 27th of June, that's the daily candlestick. So on a shorter time frame, let me just go to say 30 minutes. On that same date, on the 27th of June. Yeah, this is a very beautiful example. So if we're looking at this, just hold on. Okay. All right. So on the 27th of June was actually this date. Now, do we notice we're seeing multiple green candlesticks on the 27th of June? Do you notice that? On the 27th of June, we're seeing multiple candlesticks, and although we did see from this point on, we're seeing red candlesticks, red candlesticks from this point here, and some green. So let's say, for example, on the 27th of June, someone was about to enter at these levels here, because it's using the 30 minutes on the 27th of June, seeing green candlesticks and it's going up. What happened next? The price went down, it went up, and it went down again. If someone had taken a position somewhere here because he saw two green candlesticks opening up, and then let me just quickly take a long position right here. This is actually 30 minutes. So each candlesticks represents 30 minutes. Keep that in mind. For each of the time frames that you select, all the candlestick represents that particular time frame that you selected. Someone's mic is on. Can you please, Louise? Okay, let me just mute. So on the 27th of June, where were we? Right here. If you were taking a long position right here on the 27th of June, right here, going long, taking a long position, thinking, okay, the trend is going up because the previous candlesticks have been bullish green. Look at what happened. You took a position right here at $297, and then price goes down to $292. So that's a loss of $5. So even if you want to, I'm not saying you should not use 30 minutes. You actually can make use of that, but keep in mind that what can happen is you can see multiple green candlesticks going up, looks like price is going up, and then it goes down, and then the same thing for here, looks like it's going up and then it goes down. It went up to 300 and then it went down to 292, losing $8. So if you're making use of shorter time frames, you should really get ready to get in and get out immediately once you make profits. You don't sit on that position you've taken, because remember, for that 27th of June, on the 1 day, on the daily, it actually opened with a candlestick that was red right here. You're seeing it. Let me just open that. All right. Let me bring that up real quickly. All right. A red candlestick opened up on the 27th of June. So that tells you that that day the market was actually going down. So if you're taking shorter time frames, you're trading with shorter time frames, always make sure that you're looking at the longer time frame, the daily, to see what the overall direction of the market is going. And if you want to use the shorter time frame, then just get in and get out really quickly. So that's actually why it's very necessary to use more than one time frame when you're trading. So for me, what I actually do is, when I'm trading, part of the strategy I make use of is I don't try to stay more than 24 hours on a position, even if I'm taking a long position or a short position. The reason why I don't actually do that is the market could actually go either way. Look at what happened here in 1 day. It went down 27th of June, and then it went up the next day. So if I were taking a short position right here and staying on that short position, I could have been in a loss, because the following day, 28th of June, the market opened with a green candlestick. And then the next day, on the 30th of June, then it opened with a red candlestick, and then a green, a red, a green. So you don't actually stay on a position like traditional market, where you'll be trading and you would want to, sit on a coin for like 1 or 2 weeks to see if it's going to go up. You don't do that here. You just get in and trade within 24 hours. Get in, make your profits within that day. And what you actually do is, if you were taking short positions here and decided to close the trade somewhere here, you would actually wait the next day to look at the daily and see what candlestick opened that day. Is it a green or is it a red? So if it opens up with a green, that tells you it would be nice to take a long position. But if it opens up in a red, then that tells you it would be nice to take a short position. And another reason why I actually don't like staying more than 24 hours on a position is because there is so much volatility in the market. For example, I've noticed that there are some particular times of the day when the market is very volatile. So I'm very careful. If we're getting to that time, I know I should not or should be trading. For example, you may want to write this down. The market is usually, I've noticed it's usually very volatile by 5 a.m. So you might be writing this down. You might be writing this down. 5 a.m. the market is very volatile. 12 p.m. the market is very volatile, and then 5 p.m. the market is very volatile, and then past 10 p.m. or after 10 p.m. There's quite a lot of volatility in the market. So at those times, I'm usually very cautious when I'm trading because I know it could either go both ways. So all I simply try to do is to avoid those times. If you've been trading before, you will notice that normally if the market wants to really go up or down, sometimes you just wake up and see that the market has gone up, and that's around 5 a.m. or the market has gone down. Whether it's going to go up or down, it usually happens around that time, 5 a.m., 12 p.m., 5 p.m., and then somewhere around past 10 p.m. There's quite a lot of volatility in the market. But when it's 11, except you want to stay all night on a trade, on a position, then you might want to trade past 11. But I normally don't like trading because the point is, if you're awake in the morning, you can actually make profits. It's not like you're pursuing the market. You just wait and allow the market to give you momentum. So when it gives you momentum to what direction it's going, then you simply know what you should be doing. So you don't actually need to wait till the night or trade late into the night. Sometimes the price can move during the night. So if you're awake at that point, you might want to get in on the trade. But the strategy that I make use of mainly is I make use of 3 different time frames when I'm trading. And the reason why I make use of 3 different time frames, well, we're really going to jump into it, but it's just because it gives me an idea of what's going on in the market at those different points in time. So I always want to make use of the 3 different time frame. And so for taking long and short position, remember I said it's not like the traditional market where you just get in on a coin and wait for a week or two. You're actually looking at taking positions right here. This is the daily. So where your profits are coming is, this is the candlestick you're interested in, the daily. This is the candlestick you're interested in right here. So this green candlestick is what we are concerned about, this one. So when you're taking position, just simply look at the daily trend. If it opens with a green candlestick, since we already know we can trade at both directions of the market, to the upside and to the downside, you don't really need to sit and wait for weeks before you're making profit, since you're giving 50x. So look at this price range here, from here 272 to 296. That's pretty high. And if you were taking a short position right here, so wherever the point at which you take a position right here, you can notice the price is actually moving within the day from 340 down to 278. So since you're giving times 50, even if you didn't spot it here, you spotted it here, somewhere at this region here where you're seeing the hand, spotted it there or here, you spotted it from, say for example, you spotted it from 317 and you sold out somewhere here, you're in profit already. Or it was the green candlestick from here, you bought 275, you didn't get it right here, you spotted it here, 282 down to 291. Remember, you're giving times 50. And if we just do a quick forecast right here, if you were taking a long position, you didn't spot it here, spotted it here on the daily candlestick from here down, and you sold somewhere in this region. You didn't sell at the peak, or maybe you sold here on the daily right here. That's 4.27%. And remember, you're giving times 50. So if you were to calculate that, 4.27 times 50, That's just around 217%. This is really why leveraging is really nice. In the traditional market, if you were trading Ethereum, you could have made 4 point. If you bought here at 279 and sold at 292, you could have made 4.51% right there. But since you're giving times 50, and that's what you're leveraging on, you got in at 279 and sold at 292. Just do a quick multiply of that. If you were leveraging, you could have made around, let me just quickly calculate that, 225%. So if you're not really greedy but you're just riding the market, you're definitely going to make profit, whichever point you get in using the daily. So if you were shorting at this point and got out somewhere using the forecast, let me just do a quick shortcut. If you were shorting somewhere here and you got out from here, that's 6%. So even if you didn't get in at the peak where it started falling down because you were taking a short position, 6.57 multiply that by 50, that's 328%. So if on a daily you were making 300%, 200%, I mean, that's huge profit. You don't have to be greedy. You don't have to worry about getting in at the right at points, two different points where it started dropping to the point where it dropped to. No, you can't get it right really, because I mean, you're not a robot. You can't just pick it from there. Same thing from here. It would be difficult for you to get it from here and sold at this point or at this point before it started falling. So just be content with the little profit you're able to make. So what we do with this is we trade on a daily basis. So you just use different time frames, of course, taking into consideration your higher time frame, which is the daily, looking at where the price or candlestick came out. Did it open with the green on the daily or the red? And if it opened with a green on the red on the daily, then take long positions. But if it opened with a red on the daily, if you take a long position, what's the likelihood you're going to make profit? And that's why you see on this particular day, June 27th, if anyone took any long position on this day, well, I really feel sorry for him, because that whole day, look at what happened. Price kept coming down. So if he had taken a long position when he saw on the daily it opened up with a red, then he would not make any profit because he was going long while the daily was saying prices are coming down. But if someone had taken a position here on the daily on the 28th of June, because he opened with a green, and that simply tells you that day is going to be a beautiful day taking long position. So if someone had seen this daily candlestick here and taking a short position, what's the likelihood he's going to make profit? I noticed on the 28th of June, it never really opened a red candlestick, just green. So that tells you the prices are going up. So just keep that in mind. Always look at the daily candlestick. What is it opening at? Is it a red or is it a green? And then you just ride on the trend, just like that. So that's basically simple, and that's the essence of this course. It's not rocket science, like you have to read too much. You just make use of simple strategies that gives you an idea of where the market is going, and that gives you real profits real quickly. So the different time frames we'll be making use of is the 5 minutes, the 15 minutes, and then the 1 hour. And what you can simply do is just to go here, right here on your trading view, select layout, select multiple time frames. And once that's selected, you can just hover your cursor there and just type 5, because 5 minutes, enter. That's selected for us. Then the next 15, just type 15, hit enter, selected for us. And for the third, just type 1, R, yeah, that's selected, and you hit it. So the reason why we're making use of these multiple time frames is the fundamental rule is, remember we said if the lower, you may want to write this down, it's really a very important point. This is the fundamental rule we trade with. It's actually the strategy we make use of. And the thing is, if the lower time frame is showing that the price is going up, and the larger time frame is showing you that the price is going down, Which one will you follow? The lower time frame is saying that the price is going up, and then the higher time frame is showing you that the prices are going down. Which one will you follow? Someone can just quickly give a comment here. Lower time frame says the prices are going up, and then the higher time frame says the prices are going down. Which one do you think it would be wiser to follow if you're trading? Okay, Mr. Elochuku, would you like to go first?
Yes, I will say that. I will go with the larger time frame because I
Very good.
believe that if the larger time frame is getting short, I think there's more profit than the lower time frame.
Very good. Very good. Thank you very much. So always take the higher time frame because the higher time frame usually is always correct. Right here, what we're actually looking at is, can we actually see the candlesticks? Can we see the candlesticks?
Yes, I can see.
Okay, so what we actually have here, the reason why we're using different time frames, remember this is 5 minutes, this actually is 1 hour, and then yeah, very good. This is actually what I was looking for. But so for the perpetual contract, let me just select that. So right here, I just want to quickly give an example of why we make use of 3 different time frame. And it's really simple. Like we did say, if the lower time frame is saying prices are going up, and then you look at the higher time frame, always look at where the higher time frame is. So if you look at this now, for example, sorry, let me take this. If you look at this now, it almost looks identical, really, like prices are going down in 5 minutes. And that's actually because, the beauty of this right here is because something I really showed everyone last week is coin farm. It will tell you that the coin are being, people are taking short positions when you're actually looking at the market, Ethereum. So looking at it here, you're seeing sell, 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 sell. People are taking short positions with Ethereum, and 52% compared to those who are taking long positions. And that's actually why on the right here, what you're seeing is the for Ethereum on the 5 minutes, it looks like it's going down. But there's something really nice here. I'm going to get to that. Do you notice the last candlestick for the 5 minutes is red here? The last candlestick for the 15 minutes is red, but then the 1 hour. So if you were trading on the higher time frame, or you wanted to take a long position, at this point, it's simply telling you that if you wanted to get in and out really quickly, you should take the long, just quickly take a position, make $1 or $2 or 1% and make 50% and get out. So that's now another candlestick, a red candlestick is just opening up on lower time frame, but it's really not going to affect the market, the price, because a green candlestick is still opening on the 1 hour. But if it were the other way, that you were seeing, you notice the candlestick here is red, the one for this 1 hour is green. If you notice that you were on a trade, but then the 5 minute opens up with a green, and you looked at the 1 hour, it opens up with a red, then you know you shouldn't go with this candlestick. I mean, with this time frame, the 5 minutes, you should go for the higher time frame. But the reason why we make use of the 3 is this just gives us a clear confirmation of where the direction of the market is going when we use the higher time frame, the 1 hour, the 15 minutes, and the 5 minutes. So in this trend now, there is a correlation to a certain trade on the 4th of June. On the 4th of June, the 15 minutes was looking, okay, this is actually 5th. It's actually 5th. And this is 5th, looking for 4th of July rather. All these candlesticks right here, they represent 5 minutes, everything. Now it has opened up with the green. Now this is a fine example right here in real time. You noticed I did say if you were looking at the 5 minutes, you were using the short time frame, and earlier it was red, But see what happened. A green candlestick was still showing in the 1 hour. So if you were using that time frame to factor whether you should be taking short positions, and you said, well, in the 5 minutes is looking red, let me get out of the market because it's red. Well, that's, you could actually get out, but the green candlestick is telling you that you should be taking a long position, and it's actually going up. So that's the essence of making use of multiple time frames. However, there are some times when the 5 minutes, the 15 minutes, and the 1 hour will point to you that the market price is going up. That is, you look at the 1 hour, you see a green candlestick here, and then you look at the 5 minutes, you would see a green candlestick, and then you look at the 15 minutes, you would also, a green candlestick has opened on the 15 minutes. So what this simply tells you is that if you wanted to take a long position, guess where you should be looking at selling? You should be looking at selling at around this region right here, 290, from this point, 293, somewhere around here. You should be looking at selling, because the previous candlestick, look at where it went to, 296. Each candlestick, remember, we say they represent 1 hour. So this went up to 296. So if you were taking a long position at this price right here, 289, 288, 289, you should be looking at selling at 296. So that's just how looking at multiple time frames can really help us. Always keep in mind, like we did say, we're using different time frames, and the reason why we make use of 3 different time frames is it really helps us to see where the price direction is going on the short time frame and then on the long time frame. And if on the long time frame the price is going down, for example, and on the lower time frame it says the price is going up, then you should be very shrewd when you're trading, when you're taking long positions, because the longer time frame is saying the price is going down. However, if all time frames point to the same direction, green, 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 then like the one we're seeing here, then that's actually a jackpot for you. It tells you that you can actually go long, take a long position, and just quickly make profit in and out. So that's actually how we make use of this different time frames. It's really basically easy. So when you're trading, you have to really be patient when you're taking positions. Just let the trade come to you. Don't rush. If you want to trade, just don't rush. Just be really patient. It will always come to you when you're using all the time frames. 1 hour, 60 60 minutes, that's 1 hour, 1 day, 15 minutes, and then 5 minutes. And when you're trading, use 15 minutes. If you want to get a confirmation of a breakout, use the 15 minutes and the 1 hour. So just use the 15 minutes and the 1 hour if you want to get confirmation of a breakout. Don't just rely on the 5 minutes. Make use of the 15 minutes and of the 1 hour. So just looking at this right here using the 15 minutes, let me just quickly show you. If you were waiting for a confirmation of a breakout, if you were using the 15 minutes in the 1 hour, if a quick forecast here, from here, okay, I've had that selected already. So if you took a position here at 287.35 or anywhere really, and then it goes up to this point where it is right now, you'd have made 0.54%. 0.54%. And remember, it's times 50 that you're trading with. So 0.54 times 50, really, if that's how you're trading, and you could have just made around, it depends on how much you have, but you could have just made around $27 in just 50 minutes if you really wanted to get in and get out. So if you were calculating that 0.54 percent that you've made times 50, that's actually $27. So It's not actually bad. It's a good price range. I mean, that's just in 15 minutes. That's just in 15 minutes. But remember we said each candlestick represents 15 minutes. So this is actually really very short here. If you wanted to trade, normally you will not trade at 287 and be selling at 288. That's just, price isn't really different. But if we were somewhere here, this is also 15 minutes, but see the reaction of the price from 283 right here at 8:15 p.m. today, and it went up to 294. So you're not really looking at those small gains when you're trading. You're really looking at bigger gains. So if you were looking at the price forecast, I have so many things full here. Let me just take this away. So if you wanted to forecast from here, maybe you got in from this point and you were getting out here at this point, that means you've made 3.4%, 3.19 rather, 3.19%. And when you calculate that by 50, you've made 159% already. That's actually nice, so nice. You just enter the trade, took a position here, and because you're using the 15-minute and 1 hour, this is actually the candlestick we're interested in right here. So if you remember, we did say when you're trading, always make sure you're getting in and out if you're using the shorter time frame. In the short time frame, the longer time frame, it's pointing, same prices are going down, but here you wanted to get in and get out using the 15 minutes, and then you got in from here, got out, you could have made 100 and something percent, 150 something percent. And same thing for this point. If you had entered here from 287 right here when we did the forecast, sorry, I was saying, I actually made a mistake, was saying $27. It's actually not $27. It went up about, I think the last time I did it was 0.54%. And just do that 0.54 times 50, that's 27%. So that's 27%. So if you were using one Ethereum, you'd have made 27% of $288. So you can do the math. In just 15 minutes, you could have made around about close to $50 in just 15 minutes just by that. So it's actually the reason why we're using multiple time frames. They are really powerful, and they help us to really ride the market to where the market direction is going to. So when you're setting up your account, your trading view, please take note of these time frames. You're making use of the 15 minutes, the 5 minutes, the 15 minutes, and then the 1 hour. So just take note of that, and it will help you to set up your account really properly. So I just really wanted to show us how really quickly you can avoid stuff like you get in on a trade and the trend is going down, it went up and you thought it's going up, then it went down. It's just because you're not factoring the higher time frames. I didn't set up 1 day here because my screen will be too full. It will be difficult for you to see what I'm doing. But just to recap this point that I've just mentioned, because it's really very important. If you're trading, always use multiple time frames. You use the 5 minutes, and then you use the 15 minutes, and then you use the 1 hour, and of course the 1 day. The reason why you use the 5 minutes is what you're doing basically is you're getting in and getting out. So you also want to see what's happening within 5 minutes, and then you also want to see what's happening in 15 minutes, and then the 1 hour. So if you wanted to take a long position while looking at the 5 minutes, it looks earlier this was red before the green came out. But you take note that a red candlestick has come out. So that gives you a real-time idea of what's happening in the market, like what traders are actually doing right now. They're actually selling right now. But because in the longer time frame, it's still green, that means the selling will not really make the price go down. That's why in the last 10-15 minutes I've been talking, it still remains at to $88. So you make use of these time frames to know what's happening in the market right now, the 5 minutes, and then the last 15 minutes, and then the 1 hour. But if you want to wait for a breakout, then just simply what you simply do is look at the 15 minutes and look at the 1 hour. That will give you an idea of where the direction is really going to go to. So if it's green here and then it's green here and then it's green here, that's jackpot. But if it's red here and then it's green on the 15 minutes and then the 1 hour is green, then you can still quickly take a long position just to book in quick profits and then get out. Now, we are coming to the end of today's session, but what I really want to mention now is we've talked about how you can really tell that what direction you should be trading to. You look at the 1 day. The 1 day says if it opens up with a green candlestick, then you take a long position. If it opens with a red candlestick, take a short position. And then if you're looking at the 15 minutes, the 5 minutes, the 15, and then the 1 hour, what you should keep in mind now is you've looked at a spot where you want to take a position, and then you took a position, it went up. Now, at what price should you be selling? At what levels should you be selling? So simply put, if you were using the 1 hour, this will really help you to know at what price you should be selling. So let me just quickly open that. So if you were all the candles, you remember it's 1 hour. So if you should be selling, look at the previous levels of the candlesticks. There was a strong sell here at this point, and then here at this point, and then here at this point. So if this green candlestick was seen at this 1 hour, we're supposed to go up to this point, you should be looking at booking your profits somewhere here, these previous levels, 297. Just look at the previous point. Right now it's 288 on the 1 hour that you're looking at, but if it should go above and you're wondering what point should I be selling, look at the previous sell point, which was here. See a green candlestick and then down. So this is a strong selling point here. You should be looking at booking your profit at $297 if you were taking a long position, and right now we're going up, booking your profits here. From here, if the green candlestick continues to go up, you should be looking at booking your profit here, because that's where the sell price is reacting. And then if you were going up above, you should be looking at booking your profits here, because that's where the sell action reacted. And then if you went above, you should be looking at booking your profit here. And we can go on and on with that. That's just the way it is whenever you're trading. So you will always want to keep that in mind. You don't have to really figure out, okay, how far is it going to go? Just look at the previous levels of the sell point. That when we say sell point, we mean when the candlestick went green and up and then start coming down with a red. So those are your sell points. So the next sell point was seen for Ethereum. If it goes up from $286 in the next couple of days, so you should be looking at booking your profit at $295. There might be some shaky price action there at $295. It might drop again to around $291, $289 before it might move up again to these levels of 304. So I just quickly wanted to show everyone about how you can get in, how you can get out. I know this 11 already, and I'm just trying to see how we can cover so much in a short time. And so we've done about an hour plus of the session today. And just to summarize what we've talked about your entry point, where you should know your entry points. And the first thing we mentioned is use the 1 hour, the 1 day. If it opens up with a green, then you should be taking a long position that particular day. If it opens up with a red, take a short position. And then use multiple time frames. 5 minutes, 15 minutes, and 60 minutes. That's 1 hour. And the reason why you're doing this is because you don't want to get in that position where you're looking at the market right now, and when we say 5 minutes, you notice you shouldn't be trading with the 1 minute because there's not much data. But for the 5 minutes, when you're using the 5 minutes, that means you're looking at what's happening in the market right now and you want to take a long position. However, if you do, you might be surprised. Look at what happened. Another red candlestick came out. So you could have taken a long position somewhere, maybe somewhere here, and then a red candlestick comes out. So that puts you in a loss. But you could have avoided that really by looking at the green, the larger time frame. If you didn't get in at these particular levels right here, if you got in here, well, great, 287. There's not much difference, 288. So it doesn't really make any sense to get in at this point. But if you were looking at getting in somewhere at a particular level with the 5 minutes, and then for the 60 minutes, it's showing you that price levels are going down, and you're seeing a green candlestick on the 5 minutes, then always make sure you look at the 15 minutes and the 1 hour. They will give you the accurate idea of where the direction of the market is going to. Right now it's green, that's why it's, it doesn't really matter what you're looking at here, because the red candlestick, although it opened up in the 5 minutes, this is another 5 minutes because the 1 hour is showing green and it's still showing green. That's why all the candlesticks you're basically seeing in the 5 minutes is green. Even if it comes out with a red, look at it. This is still telling you it's still safe to take a long position because the 1 hour is still green. But if it were red right here, it were red in the 1 hour, and you were thinking of entering a trade and it was red, then chances are that you could get in on a trade if it were green on the 5 minutes and then the 1 hour was red. Then you're going to lose most likely because the higher time frame is pointing that the market is going down, and then the lower time frame is saying it's going to go up. So if you just practice at home with your trading view and just look at the time frame here, I'm trying to look at the same time when it was red right here. This was 4th of July. Let me use this, 5th of July at about this time. So let me just quickly look at that. Here it was still red at this time, showing you that, and that matches with the 1 hour. So it simply tells you that you should short at that particular time, and that's why the prices were going down. And if you notice in the 1 hour, just right here, a green candlestick opened up in 21 by that time. And if you were looking at it here, same thing, it happened. Then that's a confirmation that you can actually long. But other times when it's different from what you're seeing, then always follow the 15 minutes and the 1 hour for a confirmation of a breakout. But always keep this time frame open. You notice I've been stressing it because you should be using the 3 different time frames to confirm where you should be trading to. So the 5 minutes, 15 minutes, 1 hour, and the 1 day will give you an idea of what you should be doing, where you should be trading to. And for some reason, sometimes if the 5 minutes is pointing up, the 15 minutes and the 1 hour is pointing down, stick with the 15 minutes and 1 hour. But if they're all pointing to the same thing, then go ahead with the trend. So that will be all for the class today. We've really covered a lot, and I've just been repeating so many things about the time frames because you might actually forget about it. So it's really important to stress it, and you remember that that's actually what you should be doing when you're trading. Always look at those time frames. It will help you to know what direction you should be trading to. So here's where we're going to come to the end of the class. It has actually lasted more than an hour. There is really a lot of things everyone needs to know, and since it's recorded, I noticed that Adejoke maybe she has gone off to sleep. You can always check the recording, of course, and see what we've learned or what we've talked about so far. So this is how much we can cover for today. I don't know if we have any questions, Mr. Wole or Mr. Elochukwu.
Yeah, for me, good evening, Esley.
Yeah, evening.
Yeah, sorry for joining very late, but so far so good. I was able to pick some things from what you said, especially regarding the candlestick and the time frame and positioning and the rest.
Okay.
I strongly believe by the time I listen to the audio again, I'll be able to take my notes and then come up with my questions or comments further.
Okay. All right. Thank you. So next week we're going to cover something else in the session again. Well, this next week is actually going to be the third session. So we're coming to the end of. We just have 2 more sessions. If anyone has any questions, you can feel free to send me a message on WhatsApp or Facebook anyway, and I'll be glad to answer your questions with regards to the time frames or anything really. So I'm going to stop recording now, and I wish everyone a wonderful night rest.